Hey everyone, me Kevin here. This is great news. Donald Trump's latest pick for Treasury Secretary is an absolute game changer. And in this video, I'm going to talk about what you should be considering when it comes to investing, but also your personal finances. Let me actually start with that, and then I'll talk about why, which is the more boring part, the person and the background and all of that. First thing you got to do, the bottom line, okay? And look, I've got a ton of FINRA licenses, a real estate broker license, financial advisory license, all these things. If there's one thing I could tell you to put all of this together as not personalized advice, hashtag don't sue me, bro, get a home equity line of credit, ASAP. So for the 70% of you that own a home, please consider the following. When markets are high, which in many markets they are, it's easier to refinance or get a home equity line of credit, rather, at a higher level to get a higher valuation for your property. Even if valuations do not decline, if we go into a harder economic time with tighter lending conditions or a recession, it's going to be nearly impossible for you to get that equity out of your property. Now, I know what you're saying. Kevin, this is stupid. Why do I want a home equity line of credit at 8%? Well, this is the beautiful thing that maybe you just don't know about, and that is totally understandable. Nobody teaches this, but this is why I'm making this video, along with all other things we're going to talk about, the stock market and who this guy is that Donald Trump just picked. Home equity lines of credit are variable. They're not going to replace your first mortgage. They're a second mortgage. They're variable interest rate, which means, yeah, even if you sign up for home equity line of credit right now at 9%, don't use it to pay off your credit cards or your car or other stuff. Just leave it there. Leave it. And then in a year or two, if let's say we're in a recession or we're trending towards one and rates all of a sudden have fallen and your variable interest on this credit line has fallen substantially as well, you could pull it out at that point. See, you only pay interest when you actually draw on it. It's kind of like having a credit card attached to your home. It's crazy. It's a really, really good deal. Educate yourself on that. Maybe if you're interested, I can make a more detailed video on this, but I think it is a really good hack. Yes, they can freeze credit lines. So usually what we do is right when things are starting to poop the fan, you take the money out and you put it into like a savings account. So that way it's drawn. But things aren't hitting the fan right now. It's more like the opposite. Things are doing really well right now, which is the perfect time to establish that kind of debt. Now, the next thing that's happening is you've got the Russell 2000 at all-time highs, which is great, but it also comes with a little bit of a warning. See, a lot of enthusiasm is getting priced into markets right now because of Donald Trump's appointments, especially his appointment of Treasury Secretary today, which has actually re-inverted the yield curve. Yeah, how freaking crazy is this? The 10-year Treasury right now sits at 4.3%. The 2-year sits at 4.31%. This is the bond market screaming that we are literally in 2006 and 2007, where we're vacillating between inversion and uninversion and inversion again. It's literally what just happened. And it's the bond market telling you that things could be getting pretty poopy, just not now, in the future. Remember, it's usually not until you're between 50 to 90 basis points uninverted that markets really actually hit the tank, or blow up, basically. Things really go bad. So for now, the party can keep going. And one of the reasons the party keeps going is because Steve Bessent, the Treasury Secretary appointing, he's seen as anti-tariff. It's because he's a hedge fund guy, okay? He's kind of like a short seller. He'll short interest rates. He'll make macro moves. He used to actually work for George Soros, then spun off and did his own hedge fund, which was really kind of incredible is he's a macro trader. And yeah, he shorts, but he knows economics. He understands macroeconomics. He knows what happens with a strong dollar or a weak dollar, what happens with tariffs, how bad tariffs are. And so people think he wants to fast walk taxes, tax cuts that is, and slow walk tariffs. It's literally the best case scenario. Yes, Trump, these tax cuts are great. In fact, let's make the 2017 tax cuts permanent. Let's have more percent tax cuts. Let's come up with a 3 arrows policy. And that's going to be 3% GDP by 2028, 3% regulation reduction every single year, and 3 more million barrels of oils we're going to drill, baby, drill every single day. So people are looking at this, and it's like, if you look at the numbers, it's like yields down because inflationary fears are down. Gold down. Oil down. All of those are telling you inflationary fears down, which is great. This is like, if you're Steve, you should be happy right now because the market is basically cheering you. The market's really happy about you, and it's like, it's really flattering for Steve. But so from a personal point of view, look, this is great. Lower taxes, slower walking tariffs. But I want to be pretty clear about this. I personally think a lot of the tariff talk was overblown anyway. And so this just sort of reiterates that and kind of more confirms this. And I personally think that unfortunately markets can get very, very exuberant in good times. And they kind of assume that the Trump administration is going to get everything done perfectly. And while I hope they can get their initiatives through, I hope that just, because they've got great plans for especially business, right? Usually things just move slower than you expect. So markets just aren't pricing in a hedge for that. And this is why I think the best hedge is actually what's blowing off its bottom support line right now of $90. The best hedge right now, I'm sorry to shill it again, but it's TLT. I mean, consider that. TLT right now, it's bouncing off of that 90 level. It's at 92 right now. It's your longer bond duration fund. You can get options on it. Use it as a hedge. Be careful. If there's a second wave of inflation, it could tank. Or if there are even fears of a second wave of inflation, which I think are unrealistic anyway. But the more yields fall, the more that goes up and actually gives you money to potentially buy the dip if there's a market correction, as markets realize, oh, darn, all of our hopes aren't coming true as fast as we thought with, business skyrocketing in 2025. Oh, no, maybe there's a little bit of a slowdown and more layoffs in 2025. Oh, no, this is recessionary, right? TLT should do exceptionally well in this case. I have a price target of $130 for it. Maybe I'm biased. I'm not sure what came first, my interest in it or my bias. I'm not sure. But other than that, another one that's like fundamentally undervalued still is Enphase. Okay, I've been talking about this since it hit its $60 floor. It's now at $72, and just the last week, it's up 9% today. This has the potential to keep going. I've been talking about Supermicro going from $22 up to where it is now. It's at $37. It's up 11% on the day. It's probably going to keep going. These have fundamental support rather than only momentum support. This is something to pay attention to today, and I mention it in my alpha report. You know how to get that already, meetkevin.com/alpha. But we talk about how, when you have fundamental support on something, the stock could fall. Supermicro fell 7% one day last week on NVIDIA earnings day, and recovered all of that and way more because it's not just a momentum play. It's really a fundamental play that has momentum. Keep that in mind. The momentum could obviously slow, but watch that. At the same time, you've got NVIDIA topping out, and you're going to find this with some of the Mag 7s as people are rotating out of the Mag 7. They're rotating out of the highest cash flow stocks like the Facebooks and the NVIDIAs. And they're rotating away from these, which are actually generating massive cash flows. They're really good companies. Really good companies. And I'm not in them. I'm just saying they're very, very good companies. But people are rotating out of them, and they're rotating into the higher risk, smaller cap companies like Peloton. Peloton stock has doubled over the last month, but its revenues are flat, it's losing money, and its margins are stable, which means it doesn't have much hope of getting out of losing money anytime soon. So you have this sort of like, dare I say, looniness that, every small company is going to do great in 2025. I actually think the opposite is true. I actually think you're going to see more bankruptcies than ever before in 25, and the smallest companies are actually your highest risk companies. And this is true under a Steve Bessent, Treasury administration as well, mostly because you have to also remember the Treasury Secretary operates under the direction of the president, yes, but also via interpreting congressional law. So when, for example, the Inflation Reduction Act is passed under Biden, who interprets the rules of the Inflation Reduction Act to actually create the tax benefits and what vehicles qualify? The Treasury Department. Great. So in other words, you have to pass bills first, which probably won't happen until May or June. Then you have to interpret them at the Treasury, which probably won't happen until the end of 25 or 26, which is probably also when you get your tax cuts. So in other words, you're going to have some patience for this Treasury Secretary, but in the meantime, it does seem to be reiterating a floor on yields, a floor on bond prices, which is dropping yields. And if yields continue to drop as we unwind some of these tariff fears, which is great, I'm all for it, I'm really bullish for it, then in my opinion, you want to be bullish some of these interest rate sensitive sectors that have really sold off a lot lately. Rocket Mortgage, United Wholesale Mortgage Company, Loan Depot, Redfin, TLT, Enphase, super interest rate sensitive, but also tariff sensitive and also energy tax credit sensitive, right? All sort of Trump issues. These stocks, in my opinion, have strong fundamentals that actually get better if yields fall more and markets slow down and people get into a little bit more of a, okay, I need to find, we need to go back to a valuation correction state where the euphoric valuations come down. Yeah, it's possible that some of the mortgage companies or these other investments could also go down if there's a market correction as well. But in my opinion, they go down less because they have a fundamental support, especially in an environment where yields are falling and you're being supported there. So that's just another thesis. But look, just to wrap that up, he worked for George Soros. He has goals to deliver on the various tax cuts from Trump. He actually, Elon Musk was pushing for Lutnick, and he did not get chosen. Lutnick didn't get chosen. Instead, this guy got chosen. And this guy, compared to some of the other people were like, I don't know, maybe we could do a phased-in approach for no tax on Social Security where, if you're just retiring, you pay the regular tax, but if you're older, you pay less tax or whatever. This guy, he's like, nah, man, all in. Eliminate taxes on tips, Social Security benefits, and overtime pay. He's all in on all of that. And he sees a grand economic reordering coming, like very pro-business friendly, pro-business. It makes sense. He's a hedge fund guy. He's a markets guy. But you also have to be careful because markets guys, they are really bad at like insulating themselves for a recession. And so you tend to you get bigger highs, but then you get bigger booms and busts cycles, right? So that's kind of the trade-off that you get with a more market-driven person. A couple things to note also is next Tuesday we expect to send out which of you who have applied for robohack.ai will be accepted in. We've only got 99 slots, so that's at robohack.ai. We are having still an issue with our DocuSign sign-up link, so just email us at invest@robohack.ai if you're interested in that, and you can learn more over at robohack.ai. Anyway, thank you so much for being here. I love you all, and now it's time to hit the slopes. We'll see you soon. Goodbye, and good luck. Let's go skiing.